a depreciation question of past year paper, and we'll be solving it. So in this question, and Hunter started business on 1st April 2018. On that day, he purchased machine A for 26,000, and on 1st December 2018, he purchased machine B for 16,000. We are depreciating at the rate of 10% per annum. So first we will have to check for the financial year ending. What is the financial year? They are asking calculate the balance on machinery, provision for depreciation account at 31st March 2019. That means the financial year they are looking for is 1st April 2018 to 31/3/2019. So on this day, we have first he purchased machine A on 1st April 2018, and then on 1st December he purchased machine B. That means both these purchases falls in this financial year. So we will say machine A, the cost was 26,000, and machine B, the cost was 16,000. So total comes to 42,000. The depreciation is at the rate of 10%. So at the rate of 10%, depreciation is 4,200. And cost minus depreciation gives the carrying value. So carrying value is 42,000 minus 4,200, 37,800. Even though they have not asked, I just calculated it for your clarification. So as on 31st March 2019, the depreciation charged was 4,200. So your answer should be $4,200. Now coming to the next part, on 1st January 2020, Hunter sold machine A for 18,000. That means this machine 26,000 what he had bought, he sold it for 18,000. When? On 1st January 2020, the next financial year. That means the depreciation has been charged for this machine, and they say a full year's depreciation is charged in the year of purchase and none in the year of disposal. So in this year, that means the next financial year was 1/4/2019 to 31/3/2020. During this financial year, this machine was sold in January. Okay, so this was sold in between, but we don't have to charge any depreciation for this. They are asking us to calculate any profit or loss on the disposal. So we will just work that out. For this particular machine, it was cost was 26,000, and depreciation we will take only for the first year. So less depreciation for the first financial year, 2,600 at the rate of 10%. So what do we get? 26,000 minus 2,600 gives me 23,400. That means this is the carrying value. If machine was sold at this value, no profit and no loss. More than this, there would be profit, but less than this, there would be loss. So carrying value minus he sold it for how much did he sell? Yeah, he sold it for 18,000. So 18,000. So there is a loss of 5,400. There is a loss. Coming to part E, prepare the machinery provision for depreciation account for the year ended 31st March 2020. Yeah, the same year. So first we will and bring down the balance, they say. So the financial year we are looking for is 1/4/2019, which is very important in depreciation, and 31/3/2020. This is the financial year we are looking for. And what does our balance start with? So on 31st March 2019, the balance was 4,200. That means on 1st of April 2019, balance brought down will be 4,200 as well. So 2019, April 1st, balance brought down 4,200 from your this part C. So this we have taken from part C. The calculation you can look there. And then we will calculate the machine which was sold. The format goes balance brought down. Then here the date of sale, we will write here disposal account on the date of sale. So it was 2020 January 1. And disposal means it is the depreciation for the machine. So this is always depreciation on machine sold. So what was the depreciation? 2,600, which we have calculated in D. So 2,600, this you would take from D. And then there was a, there is a, for the machine which is left with them, we have to calculate that depreciation. So there was 26,000, which is sold. We don't have to consider that. But the business had 16,000 machine left. For 16,000 first year, that means 1/4/2018 to 31/3/2019. At 10%, if we see 1,600 was charged, depreciation. This is depreciation. So what is the carrying value? Minus 1,600. So 14,400 was the carrying value. Then the next year, again, we would charge depreciation because we are calculating it for 1/4/2019 to 31/3/2020. This was the machine left with them at the rate of 10%. So 1,440. This is the depreciation for the machine which is left for the current year. Depreciation to be charged on machine for 2019 to 2020. This is what they're asking. So this is what I will take. I'll put a star here so that you know. And this we will write here, income statement. And this would be on March 31st. And this is 1,440. I'll put a star here. Now you would balance it out. So of course this side is bigger. So we would balance it out. So it is giving me 5,640. 5,640. Difference would be 5,640 minus 2,600. 3,040. What is this 3,040? Is the balance carried down in provision for depreciation machinery account. So balance carried down on March 31st. So that means, and they told on 1st April, balance it down in 2020. So that means in 2020, April 1st, we had balance brought down 3,040. This is how you would solve this sum. If you have any doubt, you can write it in the comment below. Thank you.